Well, g'day and welcome to July 2021 monthly update, which is also the start of Home Loan Hacks edition 11. In lockdown in Sydney, so the mood's pretty low, everyone's pretty bored. Here we go again, over 100 cases a day. So yeah, tough situation, and we're sympathetic to those of you who are doing a little on the tough side with your work or life. So we wish you all the best. In terms of the banking side of remote business, the banks are well adapted to this situation now. So with remote ID, remote support, acting by Zoom on webs, etc., that's all pretty routine and pretty easy to support our clients. The property market's been really booming. This last 12 months, CoreLogic have called Sydney at a 15% growth in property prices. And I note that CoreLogic's gone to video reports for their monthly update. So we'll put the link to that in the insider newsletter and on some socials as well. Partly to do with the price of property going up, we've had a lot of interest in refinance. That's also the special of the month, where Shane's going to be answering some frequently asked questions as the special topic of the month. It's also in the newsletter, some content in there. Interesting trends in interest rates. I want to just take you across to a graph and show you this to highlight some of the current business we're doing and the current cycle we're in. If you go back to 1990, obviously rates were very high. This is a graph of the Reserve Bank cash rate target. So basically, what's the cash rate? Now this equates to about 2% under the home loan rate of the day. So rates went down to 1995, they went down to a cash rate of 5, which is a home loan rate of about 7. And then back up to about 8, which is a home loan rate of about 10. So in that range from 95 to 2008, the range of rates was about 7 to 10%. And then it went down during the GFC. Sneaked up again to about 7% home loan rates, 5% cash rate. And in the last 10 years, it's been nothing but downhill. So that's fascinating. A couple of long spells of flat around 2013, 24, or 2014, 15, and also 16 to 19. And it's gone down to 0.1% where it is now. So no change this month. And the interesting commentary from Reserve Bank, very long-term view, no change to interest rate, another year, another 2 years. But what has changed recently is the commentary around fixed rates and also the trends in fixed rates. We've seen a lot of 4 and 5 year rates rising and now some 3-year fixed rates rising. So we've got a lot of clients jumping on the back of refinance specials, cashback specials, and in particular, some still fantastic 3-year rates. We've got one special around 1.89%. Worth checking in on that because I suspect very much those rates are going to go up. In terms of the a special feature we've got this month, so we've got a session on the 3rd of August. So we're running a session. It's money mentor Adele Martin, who's our special guest, running a money masterclass. So really excited about that. It's basically everything you wanted to know or needed to know about finance when you were at school, but nobody told you. So she specialises in supporting clients in their 20s, 30s and 40s who want to get a stronger grip on their finance and finance habits and spending plans, etc. She brings it to life and it's good fun. So she also has the Savings Squad on Facebook. That's a support group. You might like to join that. You can hear more about it if you contact me to link up with the 3rd of August session, 6:30 at night. This month's special topic, really looking forward to hearing Shane talk about our feature topic, which is refinance, and some frequently asked questions. Things like why, cost, why not, loyalty to bank, etc. Cashbacks, the reasons people do it. And might it be something you'd like to engage in the conversation? Looking forward to that. So that's a special that we're doing this ISO version. We're filming separately. So we wish everyone well. That's it for the update for July 2021. And stay safe and thoughts are with you. A pleasure to be helping you. Call me anytime. Over to the promo with Adele. That lasts about 5 minutes. Cheers then. Okay, fantastic. Really excited to be here with Adele Martin today. Adele, welcome.
Thanks so much for having me.
Lovely. And we've got an exciting initiative coming up for Loan Market Richmond in the next month, and I'm so pleased to have you helping us with that. I wonder, could you tell us first a little about your backstory in your industry and where that's got you now in terms of your key focus point?
Yeah, so like most financial advisors, I was working with retirees, so helping people who were about to retire or who were retired. And what I realized from working with them for over a decade is that many of them would say to me, I wish we saw you years ago, because now they either didn't have the money or their health had suffered. They've got bad knees, bad back, and they couldn't do all the things they wanted to be able to do. I realized if I wanted to have a bigger impact and help people, I needed to see people much earlier, well before retirement. So around nearly 10 years ago, I made the decision that I would only work with people in their 20s, 30s, and 40s. So we could have those, small changes along the way. And so they could do, master their money and do more what they love now without having to, live and wait for retirement.
That's awesome. And that's what really piqued my excitement and interest in what you're doing. It's quite unique. And it's also a common thing that I'm finding with a lot of our clients where when they're starting out, they get a bit of motivation, they're aware of like a barefoot investor, but they would like some more hand holding to help them with the skills and the program. So excited to hear what you're doing with that. Wonder, could you tell us a little about the Savings Squad?
Yeah, so I've got a Facebook community called the Savings Squad, as well as a podcast that accompanies that as well. And we basically nerd out about money. So I think so often money
nerd
is
out
seen
about
as
money. I love that.
Yeah.
So they're free resources that are an introduction for people to join in and share in a very big community. I was very impressed. 1,500-ish members on that Facebook group. So nerd out together as a freebie introduction, and that heads towards possibly them considering like a boot camp approach. Where tell us a little about your the My Money Buddy type program.
Yeah, so where I'm probably a little bit different to other financial advisors is I'm really big on people understanding what they do and taking charge of their own financial future. So the approach that I take is very much a do it with you approach. So I think the Australian Financial Review called it the F45 of money, where we have made money fun. So I've got a program called My Money Buddy, which helps make money fun. We've got a series of videos and a private community and lots of resources and calculators we've been able to put together to make this money something that people actually enjoy doing.
Yeah, that's great. And you don't have to go to the gym though, do you? That F45.
No, you don't have to go to F45, but no.
All good. And so that's cool. And it's interesting because they're conversations I very commonly have with young people is I really should do better at that, or I should do better with my bills, or how do I start saving? Or I love the term I heard on the podcast you did, which was instead of a budget, what's your term for it?
A spending plan.
Spending plan.
Yeah.
That's amazing. Change the words and change the mindset is I make choices and I've got this. I just love it and the whole relationship with money. So very excited to have a little initiative coming up. And I wonder if you can tell us a little bit about the session we're doing on the 3rd of August. It's a Tuesday night, 6:30, called the Money Masterclass. I wonder, could you give us a little insight into that?
Yeah, so the Money Masterclass is all the things you wish you learned about money in school. So we're going to be talking about speeding up your savings and how to increase your investing so that you've got your money working for you and you've got more choices. So we're going to be taking you through 3 things. One is my 3-part saving system, which makes it easy to save money. We've had people, go through this and use this system that have had, 80 grand's worth of credit card debt. They've been able to use this system to pay it off. So yeah, super excited to be sharing that with you, as well as how you can, use tax to your advantage when building wealth. So I'll be looking at, once you do have some savings and you want to do some investing, what's the best way to do it in a way that can, legally save you tax. And so, yeah, we've got lots of fun things that we're going to be able to do. But for me, really taking control of your money, you taking charge, has meant you're going to have more choices. So the strategies we're sharing has got people into their own homes faster, has meant that they
Yeah,
can start their own business, has really given them a lot more choices.
I love
And
it.
so we'll be taking you through how to do that.
I'm so pleased to have met you and to hear about the approach you're taking to helping young people, but all people, take control. Really excited to have this, and also for people to pick their own entry point. So there's a freebie chat with the Money Masterclass. They can ask some questions. There's the saving squad where they can join a community, and then they can go into more of a bootcamp approach and invest in themselves, because they'll see the benefits by that time. So really excited. A huge thank you. So you're also in my podcast. I'm not sure if I told you, but this is the middle section of Home Loan Hacks, episode might be 11. So yeah, so really nice to have this little feature there, and look forward to working more with you. And this is a promo for that session on the 3rd of August. So thanks so much for joining us, and really looking forward to the session.
Yeah, thank you. Me too.
Wonderful. Thanks, Adele. That's great.
Yeah, well, thanks, Martin, for the questions you've lined up for us today. Refinancing was obviously one of the main topics of the monthly update. So we're looking at what are some of the common questions around refinancing. So the first one we've got is, or the first one we're going to cover is, what are some of the main reasons people refinance? Some of them are quite obvious, like getting a better rate, so reducing the cost of your loan, saving money over time, of course. Another one might be to consolidate some debt. So sometimes people might take out a personal loan, a car loan, a couple of credit cards. Sometimes that cash flow wise just gets a little bit big on people, and as property goes up, you might have the opportunity to basically consolidate those debts into, say, one repayment, and for some people that's a great outcome. Another one we've been doing a lot quite at the moment is refinancing someone who's got a guarantee, so a family guarantee. So historically, we've done quite a few guarantor loans, and as time's gone on and property values have gone up, some of those clients are now in a position where they can release the guarantee. So if their property value goes up and their loan goes down a bit, then once they're under 80%, we can look to refinance and basically remove the guarantors. So in doing that, it's often a good time to review and see if there's a better rate out there, or if they've got any other goals like we chatted about. Yeah, and the other one is that we commonly see is people wanting to maybe do some works around their house. So whether it's a small renovation, just a cash out, might be just to tidy up a kitchen or a bathroom or something like that to improve the home. So that's a pretty common one that we see as well. The next question we got here is, how much does it cost to refinance? So that's a great question, and basically there's not a whole lot of costs involved in refinancing. It's give or take around $800 to $1,000 as a really rough figure, and basically that covers off on the discharge costs at the losing lender, so that might be about $300 or $400, and then you're going to have some state costs, which are to discharge the mortgages through the state titles office and register the new mortgages, and maybe a couple of little application fees at the new lender. So if you sort of think $800 to $1,000, then that's a pretty good rough figure of what it might cost to potentially go and get a better rate elsewhere, or to achieve your goals elsewhere. The next one is, how long does it take to refinance? So we know basically that a purchase transaction generally takes around 6 weeks, and a refinance is quite similar. It's about 4 to 6 weeks. So the application itself, in terms of getting from submission to approval, can vary a lot between lenders, but a lender that can do it within a week or two is the normal or the on the better end. But what can take a little bit of time is actually the discharge process. So when the losing lender is to release the property, we have to send them a discharge form. And lenders generally will take about 2 to 4 weeks to process and get ready for that settlement and then book a settlement. So about 4 to 6 weeks is probably the answer to that one. Another question, do I have to take out a new 30-year loan term? So the answer is no. If you've got a loan that has 26 years left on it, you've had that loan for 4 years, you could always look to start your new loan on a 26-year loan term, as long as the lender offers that loan term. Most do. And you can choose basically any loan term that you like. More commonly, we would see people take out a 30-year loan term, but yeah, there's no constraints on that. Can I refinance if my loan is currently fixed? So that's a really good question, and often people sort of think of fixed as in I'm fixed into that loan, and you are to a point. However, in terms of a fixed rate loan, if you were to look to pay it out early, which would be the case in a refinance, if you had, let's say you had a year left on your fixed rate loan, you might have fixed it for 3 years, you might have fixed it at 3.5%. And then you've got a year to go, and let's say rates have gone down, which they have, and your new rate might be 2%. And the rate at which the lender that you fixed at could potentially then, obviously, they could only on-sell that money at a lower rate. So they're going to incur a loss. So they're going to charge you a fee for that. But what we're finding is that when somebody goes back to the bank and finds out how much that fee might be, we found that it can be a lot less than the potential benefit of the refinance. So we had one recently which was about a $6,000 break cost, which sounds a lot. However, in reducing their rate significantly over that year, they were going to save about $15,000. So yes, there is a cost, and you are somewhat fixed, but there is sometimes benefit to pay that break and to actually secure the lower rate. And so the answer to the question, can I refinance if my loan is currently fixed? The answer is yes, you can, and it's very quick and easy to ask your lender what a break cost might be, and then be able to sort of talk to your mortgage broker about, how does that is the cost and the benefit, how does that sort of balance up? And one thing that I didn't sort of touch on in talking about, getting a better rate, breaking a fix, all that sort of stuff. Lenders at the moment have so many offers for cashback. So the costs of refinancing a loan might be $1,000, but plenty of lenders are offering $2,000 or $3,000 cashback at the moment. So even after your costs, you're sort of coming out in front from that perspective. So yeah, I hope that's answered some frequently asked questions, and thanks for listening to Home Loan Hacks episode 11, and thanks for listening.